This is the J Pitt Show. I wanted to get your take on Trump instructing his representatives to buy $200 billion in mortgage bonds.
Well, I generally probably against, I will say. I like the move better than pressuring the Fed. I feel
Which
like
he's also doing.
Well, yeah, of course. He's been doing
Yeah, I
that.
know.
I mean, I think what Trump is a big fan of lower rates, obviously. I have not felt like his criticism of Jerome Powell. Now, look, I am not a fan of Jerome Powell, but I feel like his criticism of Jerome Powell is unfair. I think Trump can't stand the fact that he can't fire the Fed chair.
Yeah.
He wants to run his government the way he wants to run his government, and he's beholden to the Fed chair that he has no control over. And so he's investigating him, Now, I think the cost overrun in the construction project being something like $7 billion or something. I don't know if that's even the right number. Maybe it's like 700 million. It's like egregiously over budget and probably mismanaged. And that's probably indicative of the majority of the federal government is just poorly run and poorly managed. So I'm not saying he shouldn't stand to account for that, but he shouldn't stand to account for that because and only because he does not agree with the president's take on how he should perform his job. I think that is, if you hoped upon President Trump being elected that he would do certain things, this certainly wasn't one of them. So what do I think? I think that is within his purview. I don't know that it's a wise move because artificially lowering interest rates right now, I don't think is a wise move.
I mean, it'd be good short term. It'd be awful, awful, awful long term.
Well, I don't know that either. It depends on the performance of those mortgage-backed securities. If they perform well, which underwriting standards have generally been high. And so it's kind of like, I don't know, owning any investment, right? If the investment goes up, if you own a substantial amount of any investment and the investment proves to be lucrative, you look smart. And if it goes down in value, then you look poor.
Yeah.
So here's what I think, Ryan, to be quite honest. I think he's going to get away with it. And I think he's going to end up looking smart for it because what he's going to do by buying mortgage-backed securities, okay, he's going to drive interest rates down. Interest rates are going to produce more demand. More demand with static supply, like we always talk about, causes prices to go up. Mortgages tend to perform better when there's a spread of equity. And so if rates are high or if rates are low, demand is high and prices are on the rise and people begin to transact more, then those mortgage-backed securities are probably going to perform well. And you may say, okay, Jay, well, these are 30-year fixed rate mortgages. Yeah, but nobody stays in a 30-year fixed rate mortgage for 30 years.
Yeah, but
so I don't know. Beyond that, I mean, what's your basis for the fact that it could be a long-term catastrophe?
I mean, housing prices are just going to get more expensive.
Well, right, but that's going to happen anyway.
Yeah, but not at the rate it would happen if rates.
Well, it depends. Rates are at 5.9% right now. They just crossed below 6. But they were already trending down. Right? I don't know. The extent at which manipulation occurs in these large markets, you and I have no idea. Like what gets posted to X is 1% of what actually happens.
Sure.
So I don't know what's happening. He's been manipulating rates since he got in office, trying to push rates down any possible way he can.
Yeah.
Now, he has a point. The rest of the world has dropped rates. Okay, but we're not the rest of the world. We're the economy that which the rest of the world bases itself upon.
Mm-hmm.
So they're trying to grow their way out of recession, probably, whereas we don't necessarily need to. And yes, it's unfair that a lot of Biden policies created a ton of inflation that he's had to counterbalance, right? Okay, I can buy that, but I don't know that you do that by creating another inflationary environment. I think, you know, I think rates were going to go down already because I think jobs were a concern and they were going to become a larger concern during this presidency for him than inflation was.
Yeah.
And rates have, but a slow trickle downward is better than a sharp drop. And I think manipulation creates a sharp drop.
Yeah.
You see? So I don't know, man. To be honest, I don't know. Mortgage-backed securities is within his purview at least. At least he's not, pressuring, an independent third party that essentially is the stability of the American economy into doing his will. I don't believe in that.
I'll say the stock market didn't react the way I thought it would.
Stock market
this week
ran
after the Jerome Powell video, and
it ran yesterday. It went up.
everything I saw was like, take everything out now.
Get out of here.
Which, I mean, might be the right move.
I don't know.
Down the road, but who knows?
Never the right move.
All right.
It's never the right move, Ryan. We still have the most powerful military in the world, and our economy will not collapse as it relates to the rest of the world. So you never take all your money out. You leave it in. You ride the roller coaster.
Well,
just
needless to say, I didn't do any of that.
Do what?
I didn't do any of that.
Yeah, no, you didn't. But it's never the right answer.